Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us remotely, we have Raj Chakraborty. He's the Senior Managing Director of Publicis Sapient. We're going to take a look at how banking is going to transform following lessons learned from the COVID-19 crisis. Raj, it's great to have you with us as always. And before we get into specific thoughts around this, what are you looking at in the current situation we're in? Certainly unprecedented times for the market, certainly for banking, and how consumers are approaching everything that they do in life.
Thanks, Jill. Yeah, I think what's going to be really important is that consumers and small businesses are going to really change their behavior during and also after this crisis. I think we're realizing that people are going to unfreeze old habits and refreeze on new habits. And what's turning out to be the case is that digital channels are becoming very important as we're all kind of stuck in our homes. So it's going to be really interesting to see how consumers are really going on with their lives, businesses still getting done, and how that'll all play out afterwards. I think generally what we're seeing is that two major things are going to happen. Banks are going to have to help customers by supporting them how they need, really through personalized experiences and advice that they can look at digitally, and as well as they're going to have to provide their employees ways to work remotely with more flexible schedules so that they can meet the demand of the consumer.
All right, let's move along to our next slide here. Unfreezing of habits. This is really going to be a significant moment in time for banks across the board.
That's right. I think it creates both opportunities and threats. So from an opportunity perspective, the habits that consumers and businesses have suddenly unfrozen, right? And banks have a very short window here where they can redefine their role. The critical elements that you're gonna need to provide to consumers are personalized experiences, first of all, enabled by digital and data, and also with a helpful person when needed. It can't be all automated for everyone. It's really got to be personalized. And I think those who really come through in this time are going to be rewarded when the behaviors refreeze into a new mold. And also create some big threats. When you look at what consumers and small businesses are looking at, they sort of say, you know, what value do banks bring to me? More than half of consumers say that they're willing to go bank with Google or an Amazon or even like a Walmart or Target, sort of non-traditional banking providers. And over 60% of the emerging affluent say that they would actually consider switching their primary bank, which is a dangerous spot for banks to be in.
Well, Raj, we've spoken about this before, even before COVID-19 was part of our vocabulary, but banks are really going to have to focus on the digital and data side and personalizing their experience if they do want to be competitive with brands, like you were saying before, like a Google, like an Amazon, that consumers are familiar with and can also do their banking at.
Yeah, that's definitely true. The crisis has really shown us how consumers and small businesses are willing to behave when they're forced to behave or they have an incentive to behave. Before this, a lot of the financial institutions would have said, if we're doing 20, 30, 40% of our transactions using digital, that's pretty good. But in the past month, that view has completely changed. You see that customers are doing a lot more using digital. And today it's driven by the fact that they can't go to a branch, and contact centers are sort of, backed up and overwhelmed. But when this all passes, it's going to be really driven by a personalized journey, both before the transaction, but also after the transaction, that really gives them more confidence in the way that they engage with the bank. So the question is, how do you actually execute? And the leading banks are doing this now, but there are some laggards that are not. So I think there's sort of these three major steps. The first is that the bank must build an understanding of the customer, ethically weaving together both internal and external data, with a layer of artificial intelligence or machine learning that can help them detect the patterns of what individuals actually want. And then they have to engage those individuals using the right messaging and the right channels and create this lightweight, seamless experience that the transaction can go through, so that the customer is really in the center of that transaction. And then you have to have a remote advisor who should also be available, but somebody who knows the context of the customer and what they've gone through so far so that they can help them going forward.
And we look at our next slide here, providing employees remote work capability and flexible schedules. I never thought, it's our fourth week at Nasdaq going on with social distancing from our home and the offices. I never thought in January 2020, my role, my job would ever look the way it does now. And I would imagine nearly everyone in our situation is thinking the same thing.
Jill, it's completely unbelievable, and it shows, right? So if you've ever had to call anybody in the past couple of weeks, any company for anything, it's always things are backed up. And if you look on, for example, the types of examples that we're seeing at Publicis Sapient is on the retail banking side. Many firms have had to cut call center staffing and really follow the social distancing principles. So there's fewer reps in the actual call center. And this, combined with the big increase that we've had in volumes, is creating all kinds of wait times and poor service. But you see the leaders in the space, what they've done is they have actually been able to flip a switch and bring up significant work at home teams. And they've been able to keep up with the demand. The ones that have not had that really are suffering. And you look at the client experiences that they're having, they're not that great. But the leaders are able to rally their teams remotely and deliver these services and capabilities that the ones who haven't gone as much digital or cloud-based have not been able to do. The other area is in wealth management. We've literally seen advisors who have had to stay home, and movers come and pack their stations and their phones because they don't have any way of securely in a compliant way being able to serve their clients from home. And again, the leaders have been able to kind of, again, flip the switch and do that from home. And, ironically, the cloud-based technologies that we all think are not as secure or not as usable in the financial services space, ironically, these are the ones that are more able to be managed and more secure and have all the compliance frameworks when people need to work remotely.
All right, and Raj, it certainly is unprecedented times, but I think some opportunity can come out of this as our traditional habits of consumers, of small businesses, of big companies, of governments are going to change. And I really think those opportunities are hinged on how well people pivot and adapt. I mean, this is the greatest exercise that we can certainly recall over the past few decades.
I think you're exactly right. Typically financial institutions look at their customers in terms of life events when people are willing to make a switch. If you have a baby or you buy a house, that's when a banking relationship can change. This is showing us that there are actually other types of events that can cause a change. And I think we've unfrozen the customer habits, but they're going to refreeze again. And they're going to refreeze in a way that's either good for the banks or bad for the banks. And, if we become, as an industry, if we become much more valuable to our customers through these personalized experiences, I think we'll win. And when it all refreezes, the banks will be in a much stronger position from a retail perspective than they are today.
All right, Raj, appreciate the insight. As always, hope to get you back in studio sooner than later.
Thank you, Jill. Stay safe.
All right, thank you. And thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.